Hello and welcome to the Collective Shift channel. My name is Matt, and as always, I'll be with you today sharing this week's biggest news from the macro and crypto spaces. I will also be finishing off with my thoughts on the state of the cryptocurrency markets and providing some of my opinion on just where I'm seeing the market in general and some short-term catalysts that I'm keeping an eye out for. So we'll start as always with the Australian economy, and it's been in terms of the stock market, it's been a flat and negative, so a soft kind of negative week for the Australian stock market. It could have been a lot worse if it weren't for some strong performance in the energy and oil sector, which was driven up predominantly by a very strong performance by the oil. The price of oil has been increasing a lot in the past week, in particular, as I'll get to soon. In relation to the state of the economy, there was some data out from the Australian Bureau of Statistics with regards to the retail sector, uh, indicating or revealing that the retail turnover fell by 1.7% in August, and that followed a 2.7% slump in July and 1.7% decrease in June. So can see the retail sector, which accounts for almost one-fifth of Australia's economic output, is continuing to, unsurprisingly, be at a very weak state. That comes, yeah, after obviously Victoria and New South Wales, Australia's two most populous states, continue to be in some sort of lockdown. And but in it for an update on the state of the COVID situation, for those who perhaps haven't been paying attention or keeping up to date with it, um, both the states and Australia in general continue to have historically high or some of the highest daily case counts that we've seen in the pandemic so far. But it also comes at a time when vaccination rates are increasing at a promising clip, and both the Australian and New South Wales governments have announced or are very soon going to be announcing a roadmap out of going back to a society that essentially is going to live with COVID cases, much like many other developed nations. So for retail in particular, such a huge part of the Australian economy, and also the manufacturing and the trades, the tradies as we call them here in Australia, construction, they will also be very really hoping for those vaccination rates to continue to improve at a promising rate. So also just on these oil prices, as I touched on earlier, that has surged for the sixth straight day. And the main reason why oil price is going up by so much, it's basically investor hesitation or investor fears that tighter oil supplies are going to be a problem for the short term, essentially due to rising demand caused by many developed nations coming out of lockdown. Well, they already are out of lockdown, but that continued, I suppose, recovery out of caused by the pandemic. So that's one of the main reasons why oil is climbing to, yeah, prices not seen since October 2018. So particularly noteworthy there in the past week. As I covered last week, all of this Evergrande saga, which seemingly came out of nowhere in terms of the mainstream business news, it kind of just came and went, and without a huge, I guess, economic collapse or contagion, as some people were kind of thinking could possibly happen. As I said, I didn't think it would be that severe. Obviously, I think we'll continue to hear about Evergrande in the coming months, of course, but yeah, the ramifications weren't as severe and that impending collapse, mainly because of what I said last week, that the corporate bond markets had been pricing in this, I guess, really weak and risky nature of the Chinese property developers, with Evergrande being the biggest of that lot. So that's just an update there. I'm sure I'll continue to keep you posted when there is significant news from Evergrande in relation to Evergrande. But that's basically over the past week, it kind of has really gone out of the spotlight, and yeah, essentially the news works very quickly these days in particular, and it's not as much front of mind for investors just almost a week later. So some key lessons we can take away there in terms of just market sentiment, things like that. Just quickly wanted to touch on International Monetary Fund, so a huge global body, I suppose you could say, that has it really helps. One of their main kind of values or reasons for being is to help underdeveloped nations or struggling nations that are struggling economically. The IMF or International Monetary Fund will provide them with yeah, will essentially lend them money to help these nations get out of economic trouble. And they also just have a lot of, I suppose, power in terms of their discourse and their dialogue. So in their speaking of which, they published their annual note on Australia, and the IMF has said that Australia should ditch stamp duty, strongly hinted at removing negative gearing, and also recommended tightening the lending standards. So a quote here from them: surging housing prices raise concerns about affordability and financial stability. And it goes on, structural reforms to boost housing supply and targeted support for low income households are needed to improve housing affordability. So we saw this in the past federal election, as many Australians would know. The Labor Party was essentially looking to kind of make housing a bit more affordable. I think it did kind of get overblown, I guess, their plans, and it was poorly communicated. And you did see a Labor Party which was not strongly favoured to win the election, but I think from memory they were leading the polls at that stage, and you saw such a huge reaction to that, and like a main reason why they eventually did not win the election. So this prob not issue of housing affordability in Australia is just going to continue to be a narrative. Like in my opinion, it's not going to stop anytime soon. And I struggle to see a scenario where these recommendations by the IMF are imposed, which we have seen countries such as New Zealand actually, in fact, in the past few days. They tightened their lending standards further to reduce the amount of loans that can be given to people with less than 10% of capital to deposit. But yeah, in terms of Australia's property market, I can't really see those, I guess, prudential standards being tightened, at least severely. Um, okay, and just moving on to the US, and as I covered in last week's video, there was going to be commentary by the Fed or remarks by the Fed, their chairman, Jerome Powell, and many, I guess, market observers and economists were keeping an eye out for remarks and language to do with the schedule of tapering the bond buying program or monetary stimulus. And it was a bit more hawkish than expected, which is just a really central bank specific term that essentially just means when comments are not in line with expectations, and the Fed or central bank kind of leads on that they will be easing monetary policy sooner, sooner than many expect. That's called a hawkish statement, and dovish is essentially the complete opposite. So as I've covered in past videos, it's all to do with expectations. It's what moves markets, in my opinion. Well, it's whatever the difference between what actually happens and what is expected by the market is ultimately what moves markets up and down, whether it's currency, stocks, bonds, and to an extent property as well, and of course our favorite cryptocurrencies. at least for the short term, while it is so heavily correlated with stocks in particular. So, what did the Fed say in particular? I think it was more to do with, I think early 22 was the consensus kind of expectation of when the Fed would start easing monetary stimulus and cutting back their program of purchasing government bonds. And there was some language by the Powell, which she just more, it was more implied that it could be as soon as November or December this year, which so essentially just bringing forward that expectation, and that momentum has kind of continued over the weekend and into this week with again just more hints by Federal Reserve members, so not Jerome Powell himself, but commentary by other Federal Reserve members, that is really just bringing forward that date of easing stimulus. So that really, yeah, it does impact markets significantly because essentially when they're bringing for tapering, as you may see it referred to as it, what that also implies is that interest rates will also be increasing. So that's also another way a central bank can tighten monetary policy. Interest rates is probably their main tool historically, but another tool, as we've seen in the past decade or so, is like actual buying of primary and secondary markets, so like buying of government debt, and in even this really severe kind of cases, such as in Japan, like purchasing of actual like ETFs and things like that off of secondary markets. So yeah, when you see what the Fed is doing at the moment and other major central banks like England, the Bank of England, they're kind of strongly signaling that they're going to stop buying as many bonds, and that is kind of implied that also they will be increasing interest rates sooner than what everyone has been expecting. Why does all this matter to you? Like, why should you even care about this? When a central bank increases interest rates, like essentially the cost of money or the cost of acquiring capital goes up, and you'll see things such as bond yields increase, and that can essentially just really swing the narrative of the general stock market in terms of their risk appetite. So when things such as bond yields are going up, you'll see the appetite for things such as tech stocks and things like that really, really decrease, and you'll see a swing back to more, I guess, cyclical stocks such as like financials and infrastructure, things like that. So it's all very, very important if you are interested in macroeconomic conditions, if you're invested in the stock market, crypto, all important to be keeping up to date with. Okay, also saw European markets trade down over the past week. There has been news out of Germany. They're going through an election as well after Angela Merkel will be, yeah, um, no longer in power as chancellor there. Um, so it was more uncertainty for Germany in these elections, which again, uncertainty, markets don't like that. So that's partly the reason why European markets are seeing a bit of a sell-off as well. Okay, just quickly, I want to almost also tie in why would the government, or why would the central bank rather be cutting or bringing forward their schedule for yeah, reducing their bond buying program and potentially lifting interest rates. Another huge reason is, as I've talked about in previous weeks, is just the idea that inflation isn't as transitory as we have, or as central bankers have expected, and economists. So transitory meaning that, hey, inflation is really just going up short, like for a very short term because of the COVID pandemic. So direct correlation. So it's like the central banks over the past year and such have been just have been okay with seeing a rapidly or quickly rising inflation because they were confident that it would actually come back down very quickly. And the reason why they thought that was because of there would just be, it was really just the world adjusting to such a huge shock of the pandemic. And you're seeing labor forces and the makeup of an economy really shifting. And then once that shift was complete, central bankers have thought, okay, everything will just go back to, for lack of a better term, like back to normal, or at least as far as inflation is concerned. However, yeah, we are seeing commentary and realizations and suggestions by the likes of Jerome Powell that, hey, inflation might not be as transitory as we eventually suspected. And one of those big reasons that I wanted to, I guess, make you aware of is this idea of labor shortages, which is, yeah, now starting to creep in to be a bit of an issue for the likes of the US and EU and UK. So when there are labor shortages, obviously that puts pressure on wages and pushes the upwards pressure on wages, so having to pay more to get people to work, and that in turn increases the cost of businesses producing goods and providing services, which then leads to what's called that cost push inflation. So yeah, businesses essentially being forced to pass on rising costs and in doing so increasing their prices. Um, so that's one reason why the central bank is kind of being more entertaining the fact that inflation might hang around for a bit longer than what they initially thought. And another big reason is just ongoing supply chain issues. So these have been going for, yeah, about a year now, these supply chain issues all around the world, where COVID has just, yeah, wreaked havoc on local industries and things like that. And with the world, so like the globalized world that we live in, any chink in a supply chain or any, I think we saw Malaysia's the example I bring up, that's really caused issues for the likes of auto manufacturers who now, when these factories are closed, they cannot produce, cars, for example, and therefore that creates a supply chain or supply shortage, which again pushes up prices. So um, yeah, you are starting to see just all these factors driving up price, whether it's supply or demand. So that's another reason why, in my opinion, you will start to see, um, yeah, the timeline be continued to be brought forward by yeah, European Central Bank, the Bank of England, and Reserve Bank of Australia, and the Federal Reserve. As I said, I suppose another example of costs and prices going up for businesses is oil. That's another great example here where the price of oil, yeah, had been rising as I covered earlier. Brent crude now is at its highest price since October 2018. So again, just another example where, yeah, that's rising. The cost to manufacture things is, if oil is an input to that, now makes it more expensive for businesses and, yeah, forcing them to increase their prices. And same story again here for aluminium. Price of aluminium has now hit a 13-year high. In this case, it's been attributed to a power shortage in China. So costly freight due to COVID entry restrictions have pushed the cost of commodities higher. So aluminium being another commodity, and it's up 60%. It's up more than 60% compared to 12 months ago. So all these rising commodity prices definitely adding to this narrative. What am I looking for in the next 24 hours or so, and particularly the next week, is just more commentary by the Fed. It's really what everyone's looking at the most with respect to global macro. And we have in particular, yeah, Jerome Powell will be um, providing remarks to the Senate Banking Committee. I believe that's tomorrow, to be delivered Tuesday Eastern Time in the US. And then I believe he is also, um, I'm pretty sure he's also appearing before the European Central Bank on Wednesday. So both of those remarks are going to be heavily watched. And if there's a continued kind of trend of Powell kind of softening his language and not being as kind of determined or aggressive or conviction rather in his language that inflation is transitory, things like that are going to be yeah, really important to watch. So there has been in his speech that he releases um, before his actual appearance before Senate, as is standard practice. He actually has said here that inflation is elevated and will likely remain so in the coming months before moderating. So yeah, important to be watching, and that's what I will be looking at in the coming week. Moving on to crypto as I take a drink here. Okay, we've seen a yeah, just China's banning of cryptocurrency was the biggest news of the past week. So I've lost count of how many times this has happened since like it must be like 2013, I think was their first banning of cryptocurrencies. This one last week was definitely had more, I guess, authority and severity or clout attached to it, where I think it was 10 policy bodies in China signed this notice that cryptocurrency activities and such were going to be banned. So that's definitely a lot more than previously. And you've seen the likes of Huobi and Binance really respond to that news of the ban, such as Huobi in this case was gradually or announced that it will gradually expel its China users. I think Binance was another. No, it wasn't. Okay, there were several other mining exchanges such as Bitmart here. And also, I did see a bunch of cryptocurrency mining pool operators, again, just announcing that they were, I guess, detaching themselves from China, or at least make it impossible for Chinese citizens to access their websites and such without a VPN, which I'll get to soon. Alibaba was another one that said it was following the China's guidelines. And said, yeah, what did they say? They said it will stop selling specialized mining equipment on its platforms as of October 8. And they, yeah, said that that decision was in response to the China's policy note on crypto trading, as well as the note that so another ban that China provided in 2017. So again, just more adherence by the likes of the big tech firms in China, as well as all the exchanges. And even yeah, you're even seeing CoinGecko and CoinMarketCap. So not just trading platforms or exchanges, not even just mining operators or mining as a service providers. You're also seeing just general market information sites such as CoinGecko and CoinMarketCap. They're the two biggest, I suppose, market data websites in the world for cryptocurrencies. And now they have become inaccessible as of the past 24 or 48 hours, as you can see here in the blocks coverage. Um, and with both companies, or at least CoinMarketCap, not providing any comment, but CoinGecko's co-founder said that as far as they know, they didn't block Chinese access or IP access proactively. What does this mean? It means that it's just the same case as always, really. Like Chinese citizens will be able to circumvent these restrictions and limitations with things such as VPNs or virtual private networks. That's been the case for the past like 5 to 10 years. I suppose the rhetoric and I guess, grouping together of policymakers is a lot more unified than has previously been the case. So that might dissuade Chinese citizens from using these VPNs and trying to access cryptocurrency market information and actually participate in markets. But I'm confident that there will continue to just be a really strong yeah, body of Chinese citizens who will continue to just participate in the market as per usual. So it was interesting, as we'll cover later in the market section, the reaction to this news, even though it's probably the strongest cryptocurrency ban of the 13, 14, or 15 that we've seen in the past decade, the market reaction actually wasn't actually that severe as what it probably would have been in previous cases where the market and asset class in general wasn't as mature. And I'll also cover some trends that we've seen in response to this news with respect to, I guess, specific categories of crypto assets. So yeah, all interesting to note. Okay, Twitter. This was huge news towards the end of last week. Twitter users on Apple's iOS, so Apple's operating software, will now be able to connect third-party tipping services to their profile on Twitter. So that will include the ability to link both Bitcoin addresses and Lightning Network addresses. So yeah, tipping has always been available on Twitter, like Bitcoin tipping that is, but it's always been through third-party integrations. Um, but this is a lot more of a oh well, tipping rather. Yeah, actually attaching it to your profile is what's new here. Um, and that's being rolled out with Android users being able to access these tipping features soon. And it will rely entirely on third-party payment services such as the Strike app, which is yeah one of the well, I guess the leading app for Bitcoin Lightning Network usage and adoption. So yeah, another huge news there, more mainstreaming of cryptocurrency and Bitcoin in particular. What was particularly another huge kind of snippet and hint in this announcement was Twitter saying that it will add non-fungible tokens or NFT verification features to Twitter. There was no timeline provided, so yeah, probably in the next, who knows, could be 2 to 6 months really. And that will be huge if that actually does come to fruition because that will all be based on, highly likely, it will be based on the Ethereum blockchain, which, as we all know, Twitter's CEO Jack Dorsey has never really taken too kindly to, or rather, has just chosen to, when it comes to the crypto space, he's chosen historically to put all his attention and focus purely into Bitcoin. So to see an NFT integration coming to Twitter, and yeah, it will very likely, if it does happen, will be on deployed and enabled by Ethereum. Will be yeah, Ash like such enormous news. In my opinion, it'll just drive up usage of what is ultimately um, the Ethereum blockchain. Okay, speaking of Bitcoin adoption, and we saw here that El Salvador's President Nayib Bukele has been releasing adoption figures of the Chivo wallet, which is essentially yeah, the Bitcoin wallet that most Salvadorans are using to yeah, transact with Bitcoin ever since Bitcoin became legal tender towards the start of September, and that was a historic day for Bitcoin. So yeah, the latest data out here is that around 2.1 million Salvadorans out of a population of roughly 6.5 have used the Chivo app. So um, it is a centralized app and wallet, but like we all need to start. It all needs to start somewhere. So I'm sure over time there'll be other competitors that come out. Hopefully, and it's not just all provided through the Chivo wallet, but yeah, great to see some strong adoption figures there provided and going on there in El Salvador. Okay, also, yeah, as I covered last week, the SEC chair, Gary Gensler, was set to speak and give more language and yeah, more remarks about the cryptocurrency space and um, his want for the SEC to gain more regulatory authority to oversee actors and participants in the crypto market. Um, and that's exactly what he said, yeah, late last week. And then just yesterday, Australian time, and on Monday in the US, that is, he had even more to say there. So he expressed his belief that, quote, people will be hurt, and, quote, if cryptocurrency markets are allowed to operate beyond the remit of regulators. So again, nothing new. It's just another example of Gensler just yeah, posturing and increasing his yeah, making more noise about his want to regulate the cryptocurrency space. Um, why should you care about this? Why is it important? The more of this he does, the quicker something will happen with respect to more clarity on the state of regulations in the US for crypto. So whenever he speaks, it's even sometimes if it can just be basically the same thing he's saying, it's very important because of how fickle and uncertain the regulatory landscape is in the US at the moment in relation to crypto. So I'll continue to update you if he changes his language or if he changes his language. That will be huge news. And what it will even be bigger news is if there is actually some sort of development rather than just commentary all the time. But definitely it was worth keeping up to date with those comments there from Gensler. Okay, other big news last week was Joe Biden, or news that Joe Biden was planning to nominate a law professor who has criticized cryptocurrencies and advocated for the government to have a much bigger role in banking. So he's nominated this person. Um, I will not, I will very likely get this name wrong, but Saule Omarova or Amarova. Um, he has nominated them to run the office of the comptroller of the currency, which is one of the names in the US of all the agencies, which I always have a hard time pronouncing. The OCC, as many people just refer to it as. What is the OCC? It's the regulator, and it looks after all of the US banks and all the federally chartered banks in the US. So that's what they're in charge of. We saw earlier this year and late last year, Coinbase's former general counsel, Brian Brooks, was chosen by Donald Trump at that time he was nominated to be the acting comptroller of the OCC. And then he lasted about 6 months or so, made some significant changes, which really helped, I guess, crypto companies and crypto banks get chartered in the US. However, there's always a chance with this new appointee, if they do eventually go into that position, there is always that chance that that can actually be unwound. So that's something to always be keeping in mind. So yeah, this person has taught at Cornell University Law School, and the nomination is said to be a shot across the bow for Wall Street, as yeah, she's expected to pursue tougher oversight and stricter rules. So um, remains to be seen if she eventually does become the head of the OCC. But look, if you're being nominated by the president, it's yeah, almost a done deal. So we'll keep you updated there. Okay, just in terms of funding and capital coming into the crypto space, I've said it like in the past few weeks, and I just continue to be astounded by the amount of capital pouring into the space. From what do I mean by capital? It's investment capital, so venture capital to provide teams that are building out the crypto ecosystem and the crypto industry, whether that's service providers such as, exchanges or wallet manufacturers or wallet software providers, whether that's NFT platforms, NFT marketplaces, and then also the likes of Bitcoin mining companies, like staking validators, crypto custodians. You're just seeing so many different companies and verticals in the crypto landscape being funded with in all my time in the space and covering the space in the past 4 years, I've never seen so much capital coming in. And like to get a sense of this, like this is Sarah's Sunday Fun Day, which I hope all your members are keeping up to date with every Sunday, obviously. She goes through and covers all of those weeks, yeah, funding news. So it's just this is one of the biggest ones I've seen. So good on her for getting that out to members. But like some of the figures coming in here are just mind blowing, at least relative to the existence of the industry. These are some of the biggest numbers I've seen come through on a weekly basis. But last week in particular, I wanted to bring to your attention. Like we had So Rare raising 680 million in Series B funding. So they're a fantasy soccer game and NFT trading platform. Genesis Digital Assets, or Bitcoin mining company, raised $431 million in funding. Dapper Labs, so the entity and developer behind CryptoKitties, which was, the very, very first, or well, one of the first and the biggest NFT to initially get like a ton of traction in late 2017, almost brought the Ethereum blockchain to a halt back then. But Dapper Labs, they've gone on to create the Flow blockchain and NBA Top Shot, which is another huge NFT collectible. So they raised $250 million. And then yeah, just some other ones here like Deso, like a decentralized social blockchain, which is created by the person who created BitClout, which is I'm definitely keen to read up a bit about what his plans are with Deso. But yeah, Block Damon, I'll just read through the other names here just because I think it's worth just emphasizing how many there are. So we had the other ones for the week were Ripio, Kobo, Orca, Metrica, Portal, Blocktopia, Front, Taker Protocol, Prism, Minds of Delania, Checked, GFC Labs, Future with a PH at the start, Amasa, Heroes and Empires, Sunday Swap Labs, Grape Network that is. So as Sarah always does, she's ordered them in from highest to lowest in terms of funding. I always personally I enjoy actually in researching the lowest raises because they're typically the pre-seed or seed stage projects which are typically haven't even launched their products or protocol yet. They're the ones I enjoy personally following the most and researching because then it allows me to really get ahead of the curve and research. And when I do find protocols and apps that I like, I then like talk about it with my research team, and then we keep that in mind for producing content for members. So that's essentially when you are keeping up to date with the funding news, you're seeing other things such as trends coming up in the space. It makes it really, really clear what trends are coming up in the NFT space, what trends in the DeFi space, what trends in the governance space, and other non-Ethereum blockchains, if they are starting to get a lot of funding. Like we saw earlier this year, heaps of Solana-based projects were getting funding, and that almost preceded the huge run-up in Solana's, the price of the Sol token. So yeah, just like I just cannot stress to you enough the if you are an investor in the space and looking to make yeah, really big gains, or even also importantly, if you are wanting to get a job in the industry, like checking in on these Sunday Fun Day posts is just like is just crucial and just such a no-brainer in my opinion. And it continues to be a really, I guess, underappreciated tool in researchers' toolkit. At least that's what I experience when I talk to investors in the space. Okay, I've mentioned a few NFT projects there. I just wanted to cover a few of the biggest NFT news pieces from the past week. So Time magazine, they announced Timepieces, a first of its kind initiative and collection of more than 4,500 NFTs from over 40 artists from all around the world. So again, just more adoption by mainstream publications, household names that we all are familiar with, seeing them get involved in NFTs. Um, why should you care about that? Why is it important? It's just more validation through the eyes of everyday people who aren't really involved in the crypto space. The more times they see the mention of NFTs, the more likely they are after that 13th, 14th, 15th time of seeing it, the more likely they are to actually scratch that itch and be like, what is this NFT acronym I keep seeing pop up? Um, and not just that, but literally, the more of these types of stories that come out, the more examples of applications of NFTs you get to see, and it really just, I guess, feeds on itself. That drive of innovation and the competition is really what is really, yeah, really like has a nice tailwind going once you see more of these NFT news items coming out basically every day. More just general adoption news. We saw a music company buy the NFT of the side-eyeing Chloe meme. So this is basically brings me back to like earlier this year where like every week you were seeing these memes from like about 10 years ago being turned into NFTs. And the creator of them has really eventually now like being able to monetize or at least realize some financial gain from their memes, which to be honest, as silly as it sounds, like they are so powerful in culture, really, and they convey so many meanings and help the world communicate and essentially bond and relate to one another. So earlier this year, we saw the Bad Luck Brian meme sell for a ridiculous amount of money. The crazy girlfriend or something like that. The crazy girlfriend meme sold for a ridiculous amount. Um, yeah, why should you care about this? I think it's more just more examples of NFTs getting in the headlines, and sometimes you are actually seeing cool applications become a part of these NFTs as well, being embedded in them, such as I saw one earlier this year for a meme, a Web 2 kind of meme selling, like a one from 10 years ago. Whenever that sold, every time that sold in the future, that original creator would get, it was something like 20% of the sale price every single time in the future that sold, and that's programmed into the NFT. That kind of technology like is really just getting started and is really enabled by smart contracts. It's probably possible with other technologies not to do with smart contracts and blockchain, but to implement it and to enforce it just involves a lot of parties, and because it involves a lot of parties, it carries a lot of fees and costs. So to embed some sort of rule into an NFT um, is really exciting because you can do it in a decentralized peer-to-peer way, essentially, which really just reduces the need for some sort of middleman or some sort of entity or party in the middle of the transaction that guarantees that it is actually happening. So yeah, just thought I'd mention that there. Other big adoption news is we saw Shaq, so the very famous basketball player, and he is involved in so many things now. He's retired, so a real just cultural icon these days. 15.5 million followers on Twitter. He set his profile picture today to a Creature NFT. So again, just more adoption of mainstream figures, yeah, stepping into the NFT space. I don't need to go over how many of them we've seen this year. But I thought I'd fill you in on Shaq was this week's one after Snoop Dogg last week. In terms of price, Bitcoin has been trending down the last couple of days, has taken a turn for the worse after on Monday morning Australian time. It actually had was performing quite well, and was setting up quite nicely. I think rising above 44,000 for a brief moment there, early on Monday morning, but yeah, has really put in a disappointing, at least disappointing from the Bulls' perspective, a disappointing kind of 24, 36 hours, and is now at about 41,700. Going back to the daily time frame, as we can see on the RSI, or relative strength index, so that, yeah, big, powerful momentum indicator. Powerful because it's just so widely used. It's not inherently in and of itself a super powerful indicator, but the fact it's used by so many people makes it powerful. A very important thing to kind of understand when it comes to, I guess, TA kind of trend lines and indicators. So yeah, that is kind of showing, yeah, just no real, it's not really in overbought or oversold territory at the moment, Bitcoin. It's kind of just in a very weak position. And on the daily time frame at least, it really has a fair bit of work to do, to get back above the 200-day and 50-day moving averages. Um, and to be honest, it's even now flirting with the idea of going below the 100-day moving average. So that if that happened, that would be all three of those major moving averages. If Bitcoin falls below all three of them, that would be worrying signs for Bitcoin investors. Um, and just checking in on ETH here, it's again much the same story with Bitcoin, with ETH rather, moving in close correlation with Bitcoin. At the time of recording, it's $2,887 US, and it's been trading between 3,200 and 2,600 for the past 7 to 8 or 9 days. As I said last week, I actually this will kind of bring me into, I guess, where I'm seeing the markets at the moment. Um, I'm viewing them personally from my standpoint as a long-term investor. I'm viewing this kind of flat or downward kind of price action over the past month or so now, or 3 weeks. Um, I'm viewing this as a buying opportunity. So last week, I think I did mention on the video that I did buy. I think when ETH did go, I think around 2,900 for that first time, I brought in some more there. And if it does go down further into the 2000s, I will, yeah, definitely be adding to my stack there, and potentially with Bitcoin. To, like, it all depends on what, I guess, how severe the downturn is. I personally don't think it's going to get too much worse in the short term. What do I mean by too much worse? I can't really see Bitcoin going like under 30K, and I can't really see ETH going below like 2K in for the foreseeable future. Why do I say that? I just think we've just had so much like historically bad news in the past week, and to be honest, the past few 3, 4, 5, 6 months, that I think all the weak hands and the people that aren't really that convicted about Bitcoin, don't have that much conviction about the longevity of Bitcoin. I think all those people have come and gone, to be honest, and it's all showing up in the on-chain data, which yeah, Checkmate has been providing on the member platform for members. I definitely encourage you, members, if you're not logging onto the platform, to be checking these out. Um, and yeah, he really is just doing a great job of articulating the fact that the long-term holders of Bitcoin are holding the most amount of Bitcoin that they ever have, and same goes for ETH, which is just so encouraging to me, and that's the reason why I'm not too concerned. and why I don't expect ETH or Bitcoin to really go that much deeper down in the red in the short term. Obviously, macro conditions can really change and can really spook markets, which is what we saw in the past couple of weeks with all the Evergrande news and the fears of the Fed tapering sooner than first thought. But that so obviously that's worth keeping in mind that macro kind of unexpected events can really spook Bitcoin and Ethereum, at least whilst they are still such a young asset class, which is really just high beta and really correlated to riskier investments such as like tech stocks. So yeah, I expect just with the data we're seeing, I expect that to just really we are forming a nice base, in my opinion, of just holders of Bitcoin that are going to be here for the coming years ahead. And all those older hands that have seen all this before are, viewing this turn down and a sell off as a chance to accumulate more. So that's what I'm going to be continuing to do. And yeah, you may vary if you are a short-term investor, which I am not. I'm not a trader, nor am I really a short-term investor or swing trader. You might have a different opinion to me, and that's perfectly fine. But when I zoom out and I'm thinking years and decades ahead, I'm really viewing this as an exciting opportunity to buy in some more. And in terms of just, I guess, overall investment portfolio strategy, or at least crypto specific portfolio strategy, I would like to stress crypto specific portfolio, not just overall portfolio, which can involve multiple asset classes. Nathan did a great post here for members on where he's seeing, I guess, the allocation of his portfolio kind of change over this year and where he's kind of expecting it to go and how he's going to be changing the composition of his portfolio heading into the rest of the year. Um, I personally think that we are going to see another strong leg higher and record prices in Bitcoin and ETH before before we do enter like possibly a multi-year bear market, or at least it will be at least like a 9+ month bear market. But before that happens, in my opinion, we're going back to record prices. Um, and yeah, we'll continue to see sectoral kind of trends, which is, as I kind of alluded to earlier this week, earlier in this call, rather, we did see that with the China news. You saw things like the prices of DeFi tokens just outperform the rest of the market, including Bitcoin and ETH. So the likes of Uni, MKR, Perp, and there was another DYDX. So those two derivatives ones in particular really outperformed because of, I suppose, there was this thought that the Chinese investors would really take to using decentralized trading protocols or derivatives protocols such as DYDX and perpetual protocols. So you still see these short-term narrative shifts in the market. Um, and obviously, you can, like we have seen over the past few months, is these layer one non-Ethereum chains really, I guess, having their time in the sun and in the spotlight, whilst Ethereum continues to struggle with gas prices. So we'll continue to have these shifts in capital within the crypto market itself. But I guess what I'm saying, in addition to that, we will see, I guess, the overall size of the crypto market really go to record highs before we enter another bear market, which I believe is also what Nathan alluded to in his post as well. Um, just before I wrap up here, just a reminder that the NFT Fest Australia is starting. Oh well, the 1 day event is starting. Yeah, is runs this week on Thursday, the 30th of September, and that's been supported by Blockchain Australia, the leading industry body here in the country. And yeah, some of these speakers are just the creme de la creme of the NFT space, and I will definitely be tuning in, and I encourage you to all sign up and register. It's a free event, but obviously the links to the presentations and such will be provided through that software that you sign up through. But yeah, some really high quality speakers from not only projects but also just industry, I guess, businesses and organizations as well. So yeah, I'm looking forward to tuning into those and hopefully catching up on some recordings of those and some notes over this weekend. So that's what I will be keeping busy with over the coming week. And I will leave it there for this week. Thank you for tuning in and enjoy the rest of your week.